Say has been doing exceptionally this week. It's outperformed pretty much everything else. The question is why? Is this a pump and dump orchestrated by the rich people in crypto, or is there something fundamentally going on? Let's have a look at the on-chain data, the data most people are not considering. Now, I always like to look at adoption metrics. How much is a blockchain actually used? And a very good number for that is the total value locked, as in how much capital is currently in the blockchain. And here we've got the chart for Say. There's pretty much nothing in the blockchain, only 3 million in October of 2023. And we've seen quite constant growth up until today. We are now above $500 million. The decentralized exchange trading volume also grew to a similar degree. In the last few days, this seems to accelerate even. Here's the stablecoins on the blockchain, again on a quite nice growing trend. But that then begs the question. Yes, this week was great for Say, but when we zoom out a little bit, when we have a look at the very long-term price development, it hasn't always been that great. So how come the blockchain is used more and more over time, yet the price is lacking? Just have a look at the all-time chart. Say at one point was at $1 and then crashed all the way down to just 15 cents. Now we are at 28 cents. So yes, the last few days were great, but that's just the last few days, right? What happened before? Is there a chance that after this pump, we will see a subsequent dump again? Maybe the tokenomics give an answer to that question. So the number of circulating Say tokens over time. Unfortunately, Say has very aggressive tokenomics. So we were at 1.8 billion Say in August of 2023. Now we are at 4.3 billion. So all of that supply growth has to meet adequate demand. If it doesn't, the price underperforms Bitcoin and Ethereum. 1 year from now, we will be at 6.2 billion Say tokens. So an additional supply expansion of 40 to 50%. And so this is how the game works, right? Price is determined by demand versus supply. If the supply outgrows the demand, then we see underperformance. Now, the reason why I say underperformance and not a declining US dollar price is because we have a lot of correlation within crypto, right? When Bitcoin is suddenly doubling, then all the altcoins go up as well, maybe not to the same degree, but they tend to go up as well. So in the end, what we actually have to look at is relative performance. It's all about opportunity costs, right? The reason why we buy an altcoin is to get more performance versus just buying and holding Bitcoin. If we want to just get crypto exposure, we just buy Bitcoin. If we take on more risk by buying something that's smaller, we should expect higher returns. And so here we've got Say relative to Bitcoin. And unfortunately, since August of 2023, we have seen an underperformance of 63%, despite the recent rally. The overall trend is rather bearish. So from the top to the current price, we've seen a drop of 86%. And again, I believe that's because of the very aggressive tokenomics. Now this is Say versus Bitcoin. Here is Say versus Ethereum. And here the bottoms align a little bit better so that the current rally could also be justified just in terms of technical analysis. We are just rather cheap. But if we believe this chart, there isn't that much more upside. Maybe another 20% outperformance versus Ethereum. For Bitcoin, the potential ceiling is at an outperformance of 45%. My impression is that there's a good reason to assume that Say is going to continue to underperform. Yes, there is a lot of usage of the chain. Yes, the numbers, the adoption numbers go up. But if the inflation is that high, if so many new tokens hit the market all the time, this can't be good for price development. Right now, a lot of the rally is driven by perpetual futures, so by short-term bets on the price. Here is the trading volume in the last 24 hours on the spot market. So there was $146 million worth of trading volume on Binance alone. But on the perp market, there was even more trading volume, more than 400 on Bybit. So the bets on the price are actually what determines the price. It's not spot market buying that moves the price. It's the short-term arbitrage plays on the perps. And so those perpetual futures traders, they are not stupid, right? They can bet in both directions, to the upside or to the downside. But when the majority of those traders bets on falling prices, then the shorts have to pay the longs in order to bet on falling prices. For most cryptocurrencies, we actually see positive funding rates. So the longs have to pay the shorts. It costs money to get more price exposure. But for SAY, most of the time, we see negative funding rates. So most people think that long term, the price will go down. We also see a lot of correlation between the open interest, so the bets on the price, versus the spot market. When leverage on the token is declining, then the spot market is following. When leverage on the token is going up, the spot market goes up as well. We have seen a buildup of leverage in the last 3 to 4 months without the spot market adequately reflecting that buildup. But again, this could just be a result of most people betting on falling prices. In the end, the market makers move the price always in the exact opposite direction of where most people bet. So that's why a lot of shorts are currently getting liquidated, right? This is where the market makers make money with liquidation fees. In general, I think the current market, where there are very few retail investors, but where there's still a lot of token inflation, new supply hitting the market, it's a great situation to bet on falling prices relative to Bitcoin and Ethereum. Not necessarily in US dollars, but relative to Bitcoin and Ethereum, definitely. But I think there are some tokens that work better than others. For example, have a look at this, right? This is Balancer relative to Ethereum. Very constant underperformance over the years. This chart starts in 2021. And here we've got less risk because the usage of Balancer went down as well. Very different to the graph of SAY that's going up. Right? Here we've got increasing token supply. This is the tokenomics of Balancer. And at the same time, even a decline in usage. And so that then what causes very constant underperformance versus Ethereum. And we can just flip this around, right? If we bet on falling prices of Balancer, rising prices of Ethereum, we get this kind of chart. And this is how I personally make money. Had I just dollar cost averaged into Bitcoin over the last 4 years, I would have gotten this light gray performance. But instead, I did a bit of financial trickery in decentralized finance and I got this return. Now, I'm not sure how many other people you see on YouTube that are willing to share their own long-term performance. But really, generating those returns isn't really that complicated. It's all just about finding the right altcoins that underperform consistently. The little problem with Balancer recently is that the volatility has increased because now the market cap of the token is very small. It's only 50 million. And so there is short-term manipulation in the token. Some people call this scam candles because they don't have proper risk management, get squeezed out of the market. So we have to do this in a smart way. Have a look at our community. I, of course, share my own trades as well. So when I opened WorldCoin, a lot of other people opened that short as well and made some nice gains. And that's the whole idea, right? It's about making trades in a market that favors approaches that most people don't use, right? Most people in crypto lose. It's the same in any market. Profits concentrate towards a few winners and the vast majority tends to lose. If you still follow an approach of holding many different altcoins, hoping with your basket of 10 or 20 altcoins to outperform Bitcoin, you're probably on the wrong path. We do the exact opposite. We go short many altcoins, we bet on falling prices, and then we go long the cryptocurrencies that tend to outperform. So that's Bitcoin, Ethereum, Solana. And so it doesn't really take that much learning to figure out how to do this properly. I've made a lot of tutorial videos and feel free to binge watch them all, but you don't have to watch it all. The most important ones that I recommend checking out is this one here, using perpetual futures on hyperliquid to bet on relative valuations, and this one over here, risk management with relative valuation bets, which is incredibly important, right? If you don't know how to properly manage your risk, you will get scammed out via this manipulation attempts by a few whales. It's not the most sexy topic, but it's incredibly important. And so if you want to turn things around, if you don't just want to spray and pray, but you actually want to get involved in strategies where the odds are in our favor, where the token supply is increasing, where the early investors are cashing out, the team is cashing out, and we see this long-term underperformance, you want to make money from that the same way the insiders do, then feel free to check out Premium. It's currently $125 per month. If you sign up today, you won't get affected by any price hikes. So once there is more attention on crypto again, again, the price will revert to 165, but your price will lock in. So everybody that's subscribed will not see any kind of price increase in the future. The link to Premium should appear directly here on the screen. Just click on that. It will lead you to the sign up page. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers.